Okay, everyone, welcome to episode 5 of Beyond the Headlines. I'm going to be running solo this week. Steve is just having some technical difficulties that he's going to be contacting his internet provider about, and I'm sure everything will come back to normal next week. But it's a good week for this to happen because we had to fight really hard, me and Steve, to find things in the news that were very relevant to talk about. Sometimes you have incredibly busy news-driven weeks. The market is very volatile and active. Sometimes it's not. I think it's very important that as a trader, you make sure that you're paying attention to this and you know what weeks to really swing for the fences, to really go all out, and what weeks to kind of back off and go a little bit easier with. So, without further ado, we're going to get into it and we're going to talk here about the first story that we have up here, which is Apple's antitrust lawsuit with the DOJ. Again, no legal expert here, but I read through it a little bit. Essentially, what's happening is that Apple is getting a little bit too big, and the government's getting a little bit nervous about the power that they have over the App Store and all of that. So they have a little bit too much power when it comes to what you can get on your iPhone, how you can get it on your iPhone, the inability to side load apps, the inability to get apps from different app stores. And that's causing a little bit of turmoil within the company as they try to figure out. And this, I'm sure, will be a lengthy legal battle with Apple having all the money under the sun to fight something like this. But what we need to do is we need to get into the charts, because that's what we're doing here, and get a quick look. Let me actually refresh this. Get a quick look at what we think may happen in the actual chart. And we actually talked about Apple, I think, 2 weeks ago because of some China news they had. So it's been overall a pretty bad couple weeks for Apple. But what we talked about the other week is actually this major zone that was going on right here. Steve was mentioning that his moving averages were pointing lower. He's a very heavy moving average user and likes to use those as directions for when to get involved and when not to get involved, which again, I agree with and I totally understand the logic behind. Myself, I'm more of a purist, I guess, with support and resistance. And I like that we are still holding this support. But I would also like for what happens when his moving averages start to confirm. So you have this downtrend on the shorter term time frame that, yes, we are holding that major level at, but we need to see it start to reclaim some moving averages, or at least just trend on this chart. If I take a look and I just highlight what I see here on the trend, you have this continued down move. So I would need to see maybe a lower high be put in if we are going to bounce from that level and push higher. However, the fact that it's responding so well to such negative news, to me, that's a good thing. And it's more evidence of what me and Steve talk about every week, which is you don't just follow the news headlines, that you make sure that whatever you're doing has price as your leader, even if it was news that brought you into the idea. So that's Apple and their antitrust lawsuit right there. Now, going into this next one, this is Oracle. So Oracle is going to invest a whole bunch of money, $2.4 billion quarterly, $10 billion a year into its cloud infrastructure. And the reason they're doing that, I think, is a lot to do with AI and the fact that there's so much more data being put and so much more stress being put on these servers when it comes to demand of AI. AI is very, very expensive to deal with and very expensive to compute, which is why NVIDIA is doing so well. But if we look at this ORCL here, this Oracle, and we go out here into the weekly chart, it's a very nice looking chart. And again, I'm sure Steve with his moving averages would agree wholeheartedly here. This is a great looking kind of cup, right? We have the ability to draw these in, rounded bottom, whatever you want to call it. But it looks like, it pulled back, it found a little level of support, buyers started to come in, and this looks incredibly strong. So if this is a move into the AI space for Oracle, then I think that this is something we need to keep an eye on, where we all know NVIDIA and the benefits that happen with NVIDIA, and now we have this move with Oracle, and it could be the next player. You don't want to look at the primary player, especially when it's moved so far, but the next player shouldn't be it should be the one that you look at, right? What is, you always got to think of, instead of FOMOing into the same thing that everyone else is FOMOing into, saying, what is the thing that I can look at to do like next? That will be the trade from that. So it's a very interesting move right here, battling these prior highs. I think these highs are what we have to watch for going forward. And if we can hold above that, we're putting in a little topping tail this week. That looks interesting. If we break below, this could be a sell the news event and we could push lower. So this 127-ish area, it looks like it's going to be interesting. So next we have a comment. So we have a comment here. I love all of the comments have been very, very nice. Again, we greatly appreciate if you like and you comment and you subscribe and share and all those things. It helps the algorithm out, helps push this content out, and it will help Steve buy some better internet maybe. But basically talking about seasonality when it comes to stocks and when it comes to different securities. For this, let's go pop back here. But seasonality is essentially the idea that there is some, whether it's the seasons of the year, whether it is talking about the presidential or the business cycle, that there's some sort of cyclicality to markets that can be predicted using seasonality. The question was, do we use those? Do we think of those? And we have to break down this broad concept into a couple things, some of which I use and some of which I don't. The first one is essentially that we are talking about seasonality when it comes to things like the weather, or, hey, I want to buy stocks or buy gas stocks going into the summer because more people are driving, and vice versa. Those I very much believe have been arbitraged away, which is just to mean that if every, say, August, the price of gas went up and you could just buy gas in July and then sell it in August and make a bunch of money. If that was that easy, then there'd be enough players out there in the market that would arbitrage that away, which means that some people would start buying gas a little bit earlier, and then some gas, they would start buying it a little bit earlier and maybe selling it a little bit earlier. And this kind of competition for anything that is a normal and repeatable market behavior, that competition ends up smoothing out those returns. It's just a way the market works. It's the way the markets will always work, just because of the way they're set up. So that kind of stuff, I don't really believe in that much. Things like the presidential cycle is something we study in the CMT, and I actually do take a look at. And the idea behind that is that as a market approaches a major election, if there's uncertainty in that election, you get often sideways chop in the market. And then when the election's resolved, regardless of which side ends up taking it, you get continuation, or you get more smoother market movements. And the idea is simply, market doesn't like uncertainty. It likes certainty. It doesn't really care who's running the ship, as long as it knows that there's someone running the ship, and we know who it is, and we can plan accordingly based off of that. That kind of seasonality, I really do like the idea behind as well. So this kind of different kinds of seasonality. Some I like, some I don't like. I will say that seasonality is just like news. It's just like chart patterns. It's just like moving averages. It's all of this, in which it's going to be maybe useful in the context of an entire trading plan, but is not going to be something that you're actually going to be able to focus entirely on and say, I'm going to trade seasonality. There's nothing wrong with saying, on average, gasoline goes up in the summer. Now let me take a look at the charts and see, is there a trend there? Is there a breakout point? Is there some trade I can take, knowing that I'm just playing off the probabilities that this thing could occur, as opposed to saying, yes, there's a seasonality that occurs at this time, so I'm going to go all in on because of that seasonality. So just like anything else, it can be an arrow in your quiver, but I don't think it's something that really gets wholeheartedly involved here. Now, I was talking to Steve while we were trying to figure out getting this mess figured out, and he talked about that he wanted to give another trade example for this week. Been killing it the last few weeks. Gold did okay. Our psychedelics did great. So I'm going to defer this to him because he's been doing a great job at this. And he was pointing out this candle that we see right here in the XLF, which is a bearish engulfing candle. Let's actually switch over. Yeah, right here, in a bearish engulfing candle. So the idea behind a bearish engulfing candle is, say this is yesterday's candle right here. You have a gap up or a move up in which the bears take control, or the bulls take control and push it higher, and then the bears come in and slap it back down, and you close down here. So this candle engulfs this candle right here, saying that everything that happened yesterday and some got engulfed. Now, often these can start to be either short-term turning points or at least moments that you have to say, okay, there's some sideways consolidation going on. And one good example of this I found was the semiconductors when they put in this bearish engulfing candle right here. You can see the same thing, a nice gap up and then a really red day. Now that didn't cause the stock to fall apart entirely, but it hasn't gone anywhere since then. So using that as a moment to say, okay, I'm going to get out and reassess or take a position out, that could be one way to take a look at that. So I would watch that going forward. And again, we have XLF here. Potentially, we still have some time left in the end of the day, potentially doing that same thing right now. So if it does that, maybe this is a short-term top, either through price or through time, that could cause that issue. So we have to keep an eye on that going forward. So shorter episode today, but I appreciate everyone for sticking by me as we had a little bit of tech problems there. I am sure we'll get that sorted out for a future episode soon, but I didn't want to leave you guys hanging, so we wanted to make sure there was some content out there for you. So thank you for coming by. Again, give a like, give a retweet, give a share, and hope the internet gremlins leave Steve alone for next week, where we'll see you at the same time and on the same channel.